and welcome back to the Dukre Studios here in Geneva. I'm joined today by Roberto Falzoni, President of Dukre Asset Management. So Roberto, welcome back to the studios.
Thank you very much again, Jessica. Nice to be here.
So everyone is saying Thursday there is the Fed's decision, and it's going to be one of the most watched decisions of 2015. So in your opinion, where do you see the dollar falling in the short term around this event?
The market is very focused on this Fed meeting, expecting for the last 2-3 months, and market expectation has been varying, specifically or especially after the Chinese devaluation, which created some market turbulences during the months of August. So what people expected to be almost sure to be happening in September, a Fed rate rise, now has been diminishing because of the market turbulences and the renminbi devaluation. I still think that interest rates are going to rise. If it's not September, it will be October. So before the end of the year, definitely. U.S. economy is strong, is quite strong. We are almost at full employment, around 5%. So it makes all sense for the Fed to start normalize his policy. So there will be the main catalyst for the next few months, about by how much rates are going to rise or how fast, not if they're going to raise. And practically this is the only central bank that is in this situation. Other central banks like Bank of Japan or European Central Bank are facing economies that are much weaker and still continue the quantitative easing policy. And I expect the ECB even to become more aggressive in the next few months because the European economy is definitely not picking up, and we need definitely more growth. So in terms of dollar, the weakness that we've been seeing in the dollar for the last, let's say 4 or 5 months, for me has just been a correction after the big rise of last year. So we went from 138 against the euro down to 105. So the fact that now we have been stabilizing or correcting the move from 105 to 117, the big spikes of months of August, is a normal retracement or correction, but in an uptrend for the dollar. So I expect the dollar up move to resume relatively quickly, and especially I expect the dollar against the euro to go to parity in the next 6 to maximum 12 months, and even maybe beyond. Now, euro-dollar is one of the pair. You have emerging market currencies, which has also been very much in focus. Emerging market currency has been very, very weak, particularly against the dollar in the last few months, also against the euro. This is what we were discussing back in summer 2014, and we're expecting this weakness of emerging market currency. Probably right now they've been exaggerating. As we always say, market expectations sometimes go and get ahead of themselves. So I'm not particularly worried about reaction in this currency to the dollar, even if Fed start to raise rates, because they've already been devaluing. I mean, if you take Mexican peso, Brazilian real, Latin American currencies are down 30-40% in the last 6 to 8 months. So this, I would say, they were already pricing in a little bit these Fed moves. So, and we expect, of course, market volatility to stay and creating good investment opportunity for advised people.
Absolutely. So looking at short-term US yields, so they've spiked as of recent. Now, are you expecting this uptrend to continue?
Yes. I think that, interest rates in the US have been at a very low level, and Federal Reserve didn't raise rates since 2006. So it's been 10 years with the policy, very aggressive quantitative easing policy, and interest rate at zero. These are not the normal condition. Okay, people talk a lot about inflation, but I think that also for markets, it's not very good that central banks are supporting market with huge amounts of liquidity. That can have effects down the road, creating bubbles in asset prices. So I think that the Fed should be concerned that as soon as they can, now with the economy in a sustainable growth, they can normalize, monetary policy, start to raise rates. And as soon as they do, the better it is. Probably they will have to raise less than if they wait. The more they wait, probably the worse it's going to be, because they're going to have to raise faster and higher. So I expect in the next 6 to 12 months to have at least 1% interest rates rise in the US in the short terms. Long-term rates they've been very, very, very low, but they're still much higher than European 10-year bonds. If you compare 10-year bonds to 10-year treasury, you have 1.5% spread. I think that this is going to raise. I expect interest rates, long-term interest rates in the US also to raise, probably around 3.5% in the next 6 to 12 months.
So with that in mind then, where do you see in the long term, what kind of markets are most at risk from the US? You mentioned emerging markets.
Yes. Let's say that probably, for equity markets, if the Fed start to raise rates, equity markets will probably go through a little bit a more difficult period, because as I was saying before, a very, very easy monetary policy is supportive to asset prices. And so I expect some turbulences in some equity markets, but we already had the first kind of shock, so we could have kind of a second one. But then I expect markets still to be supported down the road. Emerging markets, I think that we have to be very careful and really define which markets, if it is Latin America, if it's in Asia, if it has a commodity, let's say related countries. I would not talk about emerging markets overall, but just to take the different situation and analyze it, one by one. So I think that it will be very interesting times for the next 6 months. So a lot of things will happen, and people should be actively managing their portfolio, and there will be very good opportunities. So I would stick definitely to a long dollar trade and a short euro trade, even probably against emerging markets currencies. The euro has been now overvalued. About the yen, I'm a little bit more cautious. I think that the big move of the yen was already there. So I expect, for example, euro against yen to weaken. Probably against the dollar, we will be in a range between 115 and 125.
Fantastic. Well, thank you so much for coming in today and giving your expertise and advice.
Okay, thank you to be here with you again, and all the best for Dukascopy spectators, TV spectators.
Thank you. And thank you for watching. For all the latest Dukascopy updates and interviews, do keep clicking back. Goodbye for now.